Selling a home can be full of surprises, especially when the offers start coming in. Let's say you've listed your house. You get an offer. One offer comes in at $500,000 and another comes in at $490,000. Common sense says take the 500K, right? But then your agent says, actually, the 490,000 is a better offer. And you're thinking, wait a minute. Are they bad at math? They're not. They're looking at something most sellers don't notice until it costs them time, money, or the deal starts falling apart. They're looking at how the buyer is paying. Because unfortunately, sometimes the highest offer most likely will fail. And suddenly, instead of moving forward, you're trying to build momentum. Hi, I'm Teresa, your South Florida realtor, and today we're going to talk about what really matters in an offer and why the way a buyer plans to pay can make a bigger difference than the price itself. Because when a buyer submits an offer, they're not just showing you a number, they're showing you the structure of the deal, and that affects how likely it is to close, whether repairs become negotiation, what happens if the home doesn't appraise, your timeline, and how much you actually walk away with at the end. We're going to walk through conventional, FHA, VA, USDA, and cash. But we're going to do this through the eye of the seller who just wants one thing: to reach the closing table without unnecessary stress. But first, let's talk about the number one deal killer in real estate: the appraisal. If you agree to sell your home for $450,000 and the bank says it's worth $430,000, now we have a $20,000 gap. And this is where a buyer can start to get anxious. Some buyers can cover that difference. Others simply can't. And the reason for that is because of loan limits and cash availability. So as a seller, you're not choosing the highest price. You're choosing the deal most likely to survive inspection, appraisal, and surprises. And here's something important: the highest offer doesn't always mean the highest net. Financing can affect concessions, repairs, timeline, and negotiation leverage. But we always got to look at the full picture, not just the number on top. First, let's talk about conventional loans, because this is where most sellers feel the most comfortable. Not because buyers are better, but because there's typically more flexibility. Down payments can vary 5%, 10%, 20%, or more, but the typical is 20%. More money often means more room to handle surprises. If the appraisal comes in low, they may have options. If repairs comes up, it's usually manageable. Conventional appraisal, they're usually focused more on value, not small cosmetic issues. Overall, conventional offers are often the most predictable path to closing. But here's something many sellers don't realize: not all pre-approvals are equal. Two buyers can both have conventional loans. One could be verified with their documents and the other might not. Strength of the lender matters just as much as the loan type. Now, let's talk about FHA. FHA loans sometimes get a bad reputation, and honestly, that's not fair. I've worked with FHA buyers who had strong income, stable jobs, and solid credits. The difference isn't the buyer, it's the property standard. FHA appraisers look closely at safety. Things like peeling paint, missing handrails, anything that doesn't look safe. Those items may need to be corrected before closing. And I've had sellers who thought peeling paint on a patio wasn't important. That's until FHA required it to be repainted. They were stressed at first, but once it was handled, the deal closed smoothly. And many homes pass FHA just fine. It really depends on the condition. So FHA can absolutely be a strong offer. You just go in expecting a few more conversations about repairs. Next are VA loans, and these are military veterans. Now, I kind of have a soft spot for my VA buyers. It's a common misconception which says zero down means the buyer have no money. Not true. It's a benefit they earn through service. VA does have property standard similar to FHA. Roof condition, rotting wood, termites, things like that. But there's something most people don't know. If the VA appraiser thinks the value might come in low, the process will pause. Agents get time to submit better comparable sales. So sellers actually get an opportunity to support their price. And many VA buyers have very stable income, which can make them reliable borrowers. So VA buyers are often very committed. The home just needs to be in solid shape. Now, USDA loans are also zero money down, but they usually apply to more rural or suburban areas. There are great programs, but there are sometimes location rules, income limits, and sometimes longer timelines. Now, cash buyers are the opposite. No loan approval, fewer moving parts, and usually fast closing. But there's a trade-off. Cash buyers usually expect something in return for that certainty, usually a lower price, sometimes fewer repairs, or sometimes a timeline that works better for them. However, though, for many sellers, that certainty is worth it for them. So, how do you choose? We look at the whole structure. Price, yes, but also contingencies. We will also look at inspection timelines, financing strength, and down payment. There is also appraisal risk, closing flexibility, and lender's confidence. If your home is fully updated or in strong demand, conventional or strong cash may feel easiest. If your home is solid but older, FHA and VA buyers can still be excellent. You just need to remember that you will need to have some repair discussions. And sometimes the deciding factor isn't the loan at all, it's your life. Do you need more time to move? Do you need rent back? Are you coordinating another purchase? The right offer is the one that fits your situation with the least risk. Selling a home can feel uncertain. Deals change, timelines shift, and things don't always go exactly how you planned it. Psalm 16:8 says, I have set the Lord always before me. He shall be at my right hand, and I shall not be shaken. And for me, that's a reminder that even when circumstances feel unpredictable, our foundation doesn't have to be. If you're thinking about selling in South Florida and you want someone who can look at the full picture, financing, the risk, the strategy before any offer ever hits the table, my contact information will be in the description below. I'm Teresa, and if you are looking for guidance on selling your home, you are in the right place. If you found this video helpful, there are more videos on my channel that can walk you through the process. Thank you for watching. Be blessed, and I will see you in the next video. Bye.